you know, you know, as if the housing market is not tough enough for buyers and sellers and realtors and loan officers, and not because property values are going down. Actually, in most areas, because of lack of inventory, property values are going up, right? But it's hard to get a deal put together, whether you're a realtor or a lender or a buyer, because there's just lack of inventory, right? And so it's scary. And there's a lot of realtors and a lot of lenders that don't know how to articulate the message of, hey, the market is still strong, right? The market is still strong. Housing values are still strong, but it's just hard to put a deal together. And realtors and lenders get paid on bringing deals together and closing transactions. So it's really hard for lenders and realtors right now. But that doesn't mean there's bad things going on with the housing market, right? As if it's not hard out there already to put a deal together. You have like the people over at CNN putting together these articles of thousands of homeowners are about to get slammed with higher monthly payments. Thousands of homeowners are about to get slammed with higher monthly payments. All right. Well, let's just say thousands represents 100,000 homeowners, right? Let's say 100,000 homeowners are about to have their payment changed because of the fact that they took out an adjustable rate mortgage. Okay, seems like a pretty big number, right? But if you realize that there's about 6 million mortgages written every year, and adjustable rate mortgages from 4, 5, 6, 7 years ago, ones that would actually be adjusting, we're talking about 100,000 loans out of 6 million, 12 million, 18 million, 20 million. So depending on how many years you want to go back, or you want to think about how long ago these adjustable rate mortgages were written, then you've got to consider, okay, 100,000, 200,000, 300,000 mortgages out of 30 million are going to adjust, right? We're talking about like 0.5% or 1% or maybe 1.5% of all mortgages that were written. And here's the thing, this CNN article, which I'll link to in the chat box if you just want to have your mind blown, it's talking about all these mortgages from 2019 that are going to adjust in 2024 because the most popular mortgage, the most popular adjustable rate mortgage is for 5 years. That just means your payment is fixed for 5 years. For 5 years, it feels like a normal mortgage payment. And then after 5 years, it adjusts once per year. Well, guess what, CNN? If you took out an adjustable rate mortgage in 2018 or 19 or 20, you probably refinanced that in 2021 when rates hit their all-time low. So yes, on the books, there was an adjustable rate mortgage that was written in 2017, 18, 19, but probably 70% of the time, it was refinanced into a low 30-year fixed payment in 2021 or 2022 even, right? Oh, so frustrating. So I read this article, right? And here's the data point they go to in their heart-wrenching article about these adjustable rate mortgages that are going to adjust. It's about poor Mrs. Hernandez and how when she refinanced her house in 2016 and got an adjustable rate mortgage, she was getting a low interest rate. And did she really know what she was doing? And the poor consumer is just getting beat up on. Well, guess what? Read further into the article past the headlines and just get to this caption and watch your mind be blown. Hernandez, who herself is a loan officer, had misremembered the term of her $1.1 million loan. Rather than a 10-year ARM where her loan would be fixed for 10 years, she opted to take a 7-1 ARM, meaning it was fixed for 7 years. Here's her quote. Here's the quote from Ms. Hernandez. I just got caught blindsided. I just got caught blindsided, she said. Life gets in the way and you get busy. I've been slammed with kids and work for 7 years. You're a loan officer. You literally look at this stuff every day. Your job is to look at interest rates every single day. You know exactly what type of loan you took. You were just a greedy consumer and you got 2% or 2.5% on a 7-year ARM. And by the way, Miss Hernandez, Miss Loan Officer, you knew that it was a 7-year ARM because all over the mortgage paperwork, it says your loan is fixed for 7 years. After 7 years, your loan can adjust. The fixed rate term is 7 years or 84 months. Okay. So she's either like can't read English, in which case she shouldn't be a loan officer, or she's just blatantly lying. Oh, I didn't know what I was signing. You're a loan officer. Of course you should know what you were signing. Here's what really happened. She took out a mortgage. She thought it was going to be a 10-year fixed, or she wanted it to be a 10-year fixed. She said, you know what? I can save just a little bit more on my payment on this $1.1 million mortgage on a house in Texas. You normally have to have 20, 25, 30% equity if you're taking an adjustable rate mortgage, which means she has a house that's probably worth $1.3 million, $1.4 million, $1.5 million, or more than that. So she's got an epic house in Texas, right? Probably bought way above her price range, had to try to get the lowest possible mortgage imaginable, right? So she got this 7-year ARM. She always knew it was going to be a 7-year ARM, meaning it was going to adjust after 7 years. She got greedy. She got greedy during COVID, even though she could have got into a 30-year fixed mortgage for 3% or 3.125% or 2.875. She's like, no, I'm going to ride it out. Maybe I can get something lower. And then by the time she actually did think to refinance, the market got away from her, right? And this is your job as a loan officer. Like, just for being quoted in this article, Ms. Hernandez should lose her mortgage license. This person should never be able to advise a person on getting a mortgage ever for the rest of their career. If you have such poor financial management skills in your own world, in what universe should you be advising somebody else on their mortgage? So no, the mortgage is not crashing. In 95% of major metropolitan areas, property values are continuing to go up instead of going down. If you got an adjustable rate mortgage prior to 2020, you probably refinanced in 2020, 2021, 2022. If you didn't, shame on you. You rolled the dice and you lost. That's okay. Like, it happens all the time. I've rolled the dice on many investments and lost. It just happens. Sometimes you buy Apple and it goes up. Sometimes you buy Apple and it goes down. But the idea that this article is proliferating throughout the business world and the real estate world as like this clickbaity headline that we're headed towards something like 2007, 2008, where, oh my God, thousands of homeowners are going to be slammed with higher monthly payments. It's like, A, they knew exactly what they were getting into. B, oh well. And C, like, when you signed up for that, any loan officer worth their salt told you, hey man, here's why we're doing a 5-year ARM or a 7-year ARM or a 10-year ARM. We're going to keep the payment low for the first few years when you're in the building stage of home ownership and you might have to replace the roof and you got to buy a new lamp and, you know, maybe you got to get your finances in order, but be mentally prepared for 7 years from now, you know, whether it's because of your hard work or wage inflation, or you've just become a better saver, spender, budgeter. You've got to be mentally prepared for a higher monthly payment, or you've got to refinance between now and then. And spoiler alert, there was the perfect refinance opportunity 2-3 years ago when the 30-year rate hit their all-time low. So I don't feel bad for any of these people. You shouldn't feel bad for any of these people. And if you see any articles like this, just know that they're absolutely 100% clickbaity, and they have nothing to do with the reality of the market, or this idea that, like, if a few people's mortgage payment gets higher, right, that they're going to all of a sudden crash the economy and the housing prices are going to go down. Because the reality is, if Miss Hernandez here, if for some reason she truly can't afford the payment, then cool, sell the house. In the last 7 years, anywhere in Texas, except for maybe Austin, they're seeing a small correction. Anywhere in Texas, you've seen property values go up somewhere between 30 and 100% in the last 7 to 10 years. So if you can't afford the monthly payment, sell it, pocket your equity, downsize, stop trying to keep up with the Joneses, and you'll be just fine financially, right? Frustrating. Can you tell I'm a little fired up about this topic and these news articles we're starting to see pop up all over the place? Anyway, if you need something, if you need real mortgage advice, if you need real financial advice, give me a call, let me know. We'll make sure that we put you into a product that's right for you and you actually understand what you're signing. Because when I read articles like this, as you can probably tell, my blood pressure goes up a little bit. So if you watch this video, hit the little likey button a bunch of times, leave a comment, something or other, just so the algorithm knows I'm not just screaming into a camera for no reason. I love you. We'll talk soon.